This one strategy took me to my first 2 5-figure payouts. What is up guys, it is James and I am back with another video. So today I want to talk about the strategy I used to get me to my first 2 5-figure payouts. I took a 10K payout, my first payout, a 14K payout, my second payout, and I want to talk about the switch I made in order to get to those payouts, because without that switch, I don't think I would have been able to get to those payouts. And this strategy was very, very simple in learning, and it really does help with prop firms. So I kind of want to go over, try to convince you guys on why you should switch to continuations. So without further ado, let's hop on the charts. Here we are right here on TradingView, and I kind of want to go over what it was like before I traded continuations. And like you know, I traded TGR strategy, looking for a liquidity sweep, break a structure, fair value gap. I did all of that. And before I was using continuations, that was more like a reversal strategy. And I was using that strategy and I wasn't getting much success from it. I was blowing through evals and I was cycling through my money just because I was trying to catch these reversals and the win rate wasn't that high. And when I was losing a lot, when I was bottom ticking and when I was bottom ticking and I would just cash these losses, it would end up me resulting in a loss over trading, and that would cause me to revenge trade. And after just constant cycle of losing, blowing through these evals, it got me lost. I was really lost, not really knowing what I had to do, and I wanted to get some success in these prop firms. All these traders were getting big payouts, and I wanted to know exactly what I had to do in order to get to those big payouts. And that's when I resulted in switching to a continuation strategy, try to learn a continuation strategy. And I was very, very glad that I did, because once I learned that continuation strategy, everything was set. The strategy was super simple, but it was effective. And being a continuation trader really allows you to just look for certain rules, and it helps with chop, because as you know, right now it's December, price action hasn't been the greatest, and there's been a lot of chop lately. And with that, that means that if there's no trending trades, no direction, no clear direction, then there's just no trade. And with reversals, I was trying to catch a lot of reversals, trying to catch the bottom and long to the top, or trying to short to the bottom at the top, and it just wasn't working out with these prop firms. So with these prop firms, it helps with the rules, because as you know, when you're trying to pass these evals, you get a certain amount of drawdown. You get $2,000 drawdown if you're going for 50Ks accounts on Top Step. That's what I use personally. And with reversal strategies, you don't have such a high win rate. So you're always constantly losing, going into drawdown, and that is not what you want to be doing when you're trading these prop firms. So moving forward, these are the 3 main concepts that you want to be looking for when you're trading continuations. And it is very, very simple. The first thing you want to look for is, where is price trending? And the main thing with this is that is going to be your drawn liquidity. Drawn liquidity is so important. That is the very first thing you want to be focusing on when you're trading. You want to look, where is the drawn liquidity? Where is price going towards? And then second thing you want to do is, once you find where the drawn liquidity is, once it's confirmed where you see price trending, you want to look for some sort of retracement. And that is where fair value gaps come in. So you want to be looking for some sort of fair value gap to get retraced into. And then that is the second thing that you need for the strategy. Third thing you need is confirmation that price is going to respect that fair value gap. And what do I mean by confirmation? You want to see some sort of displacement out of that fair value gap. You want to see some sort of bullish candle if we're looking to target bullish draw liquidities, or some sort of bearish candle coming out of that fair value gap if we're looking for shorts. And that is basically all it is to this continuation strategy. It is very, very, very simple. You look for a trend, look for some sort of retracement in that trend, a retracement into a fair value gap, and then confirmation out of that fair value gap with displacement, with speed, with volume. That is all this strategy is. It is a very, very, very simple strategy, and that is why I like it. It is very, very effective, very high win rate. And that is what we need with these prop firms. You want a high win rate strategy because these prop firms don't allow you to lose that much. You want to have high win rate strategies. So if you take a look, this is kind of a little theoretical example of the strategy. As you can see right here, prices, you could call this accumulation. I just call it chop. You do not want to be trading in this. You do not want to be trying to catch some sort of reversal, because if you try to take a trade, right here, look at this. Think of this as a liquidity sweep right here, liquidity sweep right here. Oh, liquidity sweep, break a structure. Let's go short. Short right here. Take a short right here at the top right here. And then how do you know price is, maybe there's a draw right here. How do you know price is going to continue all the way right here? Maybe price breaks out, and this is more like a break and retest where it breaks out and then it wants to continue higher to this draw right up here. That's why I don't like reversals, because we don't really know where price wants to go yet. I'd rather wait for confirmation in a single direction, wait for price to get to nearby a drawn liquidity and just take a simple retrace from that trend into that drawn liquidity. So this is why I like to trade continuations, because I rather just avoid all this chop, try to avoid predicting where price is going to reverse, and just wait for confirmation, wait for price to show me where it exactly wants to go. And here's a little example. We get another liquidity sweep right here, and this is like a, break a structure right here. And I'd rather not take a trade down here. I'd rather wait for confirmation that price wants to get to this drawn liquidity first. Once it shows that it wants to get to this drawn liquidity right here, that's when I'll take a trade. So I'll wait for price to trend higher. And once it reaches all the way up here, breaks above this whole chop, above this range, then I'll look for longs. So
someone was detected.
This is where,
driveway ring.
Sorry, that's my Alexa. But I wait for price to trend, and I wait for it to get all the way near this draw. Once it gets nearby here, I know this drawn liquidity is confirmed and price wants to here. So I wait for some sort of retrace, and that retrace could be a fair value gap. So once it gets right here, retrace into a fair value gap. Now I'm looking for some sort of confirmation that this fair value gap is going to get respected and it wants to continue higher. And what is that confirmation? Some sort of bullish candle if we're taking longs, some sort of bullish candle, a strong bullish displacement candle out of this fair value gap, and boom. Take a long right here. Imagine some sort of strong bullish candle, stop loss below the low right here, targeting this drawn liquidity for easy 1-to-1 RR trade. So that is the main concepts of the strategy. It is very, very, very simple. And when you see this type of price action right here, chop, that is when you stay out. That is when you do not want to be trading, and you just avoid a lot of losses with this type of strategy where you're just staying out the market. Because when you're trading this continuation strategy, you only really need a couple of big trades in order to get a decent sized payout. So that is why I trade continuation strategy, just because it is so simple. If you don't see price trending, then you're not going to look to take a trade. And when you start seeing price trend in one direction, that's when you're going to start looking for a trade. So it is very, very easy to stay out, very easy to avoid losses. So moving on, why is this good for prop firms? Because if you think about it, if there's a higher win rate, if you know that you're going to win 80 or 90% of your trades, wouldn't you want to risk heavy on your trades? Wouldn't you want to risk $500 to $750 per trade, maybe even $1,000 if the trade is AAA plus obvious? If the setup is so obvious and you're guaranteed 90% to win, then wouldn't you want to take your chances and bet heavy that that trade is going to win? Yes, you want to bet heavy because more than likely you're going to hit, and all it takes is a couple of trades to get a good sized balance for a payout. And along with that, if you're having a higher win rate, you're going to be taking less losses, and this is good for not going into drawdown. This is less drawdown because these prop firms want you to lose. They have trailing draw, for Top Step at least, they have trailing drawdown for the first $2,000. That means you cannot lose $2,000 or else your account is going to be blown or your eval is going to be blown. So you do not want to be losing with these prop firms. So I'd rather risk heavy, have a high percentage win rate, and just take, you know, 1 or 2 trades a week, maybe 1 trade every 2 weeks. But I'd rather do that instead of trying to catch reversals, risking less and trying to catch reversals and taking these smaller losses like these $150 losses or $250 losses and trying to get more RR. I'd rather just get 1-to-1, 1-to-2 RR trades and risk heavy, risk $500 to $750 per trade and just bank that trade is going to hit because I have that 90% win rate. And this is also good because it allows for a lower frequency trading style. You're going to not be revenge trading. If you know that there's only going to be 1 or 2 setups per week, if that, maybe 1 setup. If you know that, then this allows you to know that there's going to be no revenge trading. You got to know that you're probably not going to get 2 trades in a single day. And if you know this, you're not going to revenge trade. And this is, if you take a loss on a day, then it's easy to just log out after that trade because you know there's probably not going to be a setup. I have a strict rule. If I have 1 loss during a day, then I just instantly lock out. I do not want to blow my account, especially if I'm risking heavy on these trades. If I risk $750, I do not want to take another trade that day because I already lost $750 on that day. So this helps me with not revenge trading, not over trading, and just locking out for the day. So if we continue on, here is the strategy, a little game plan for you to get to your first 2 5-figure payouts. This is what I did to get to my first 2 5-figure payouts, the 10K payout for my first one, and then 14K for my second one. But first, you're going to want to buy 5 50K accounts. This is why prop firms are good, because they allow you to scale easily by copy trading. You're going to buy these 5 50K accounts, pass the evals, and now you have 5 50K accounts, and this allows you to copy trade all 5 accounts. Third thing you want to do is risk heavy. If we know that win rate is high, 80-90% win rate, you want to be risking a good amount. I know that for my strategy at least, I'm not going to lose 3 or 4 trades in a row, and if I do, then my account is blown. But going off the fact, knowing off the statistics, if I execute the strategy correctly, I shouldn't lose more than 3 trades in a row. So this allows me to risk $500 to $750 per trade when I'm first starting an account, just because my drawdown for top step with 50K accounts is $2,000. So this gives you a 3 to 4 trade buffer until you blow your account. With that going into mind, you want to build your account to $4,000. And when you first start your account, this is going to take a while. It's going to take 4 or 5 trades if you're hitting 1-to-1, 1 to 1.5 RR trades, sometimes 1 to 2 RR trades, but it's going to be, you have to be patient because you are only going to get 1 to 2 trades per week, and you're going to be banking on hitting heavy, hitting high risk trades with this, and you're going to try to build your balance to a $4,000 balance. So you do need to stay patient. It took me about a month to get to this $4,000 balance, but once you hit that $4,000 balance, that is where you want to take out $2,000 per account because it allows you to take 50% of your balance. So taking out $2,000 per account times 5 accounts, that is a 10K payout. And that is a major accomplishment if it's your first payout, but that is your first 5-figure payout. But this is where things get interesting. Now that you take out $2,000 from your account, that leaves you at $2,000 balance after, and what you only really need is another $2,000 to get back to your 4K balance. And this is where it gets easier, because instead of making $4,000 like you did for that first time, you only need to make half of that, $2,000. And once you hit to that 4K balance again, then boom, you can get to that second 5-figure payout because you can take a $2,000 again from that 4K balance. And all you really need is 2 to 3 trades with $750, and that can easily get you a 4K balance. You can even go higher than a 4K balance with that. So that is all you really need to get your second 5-figure payout, and then all you do after that is just keep on repeating that cycle. And If you keep on doing that, then you'll be able to get 5-figure payouts every single time, because this is such a high win rate strategy. You're almost, I wouldn't say guaranteed, but if you know that you have an 80 or 90% win rate, all you have to do is risk heavy on those trades, bank on hitting those trades, and just get to that 4K balance where you can take out 2K each from those 5 accounts. You'll be cycling through these 5-figure payouts, and that is a lot of money. And that is personally what I did. I was trading reversals and it was not working out. I was very, very lost. And then I found the continuation strategy, learned it. It only took me about 2 months to learn it, locked in with my psychology, and I was able to get to my first 2 5-figure payouts. And it has changed my life, and I am so, so grateful that I found this strategy. And this right here, if you, let me actually delete or remove this real quick. This right here was actually the trade. I went back, I actually recorded a trade recap on YouTube. October 10th, this was a trade that I took to actually get to my first 10K payout, and I want to give you an example of how simple this trade is, how simple this strategy can be when you're trading. So here we are. Let me actually go to the 1 hour time frame and show you exactly what I did. So looking at this right here does not look very appealing. Going on the 1 hour time frame, this looks like chop. You don't really know where price is going, but if you come down to the 15-hour time frame, or the 15-minute time frame, my apologies, you look for your drawn liquidities, and we have this 15-minute gap right here. So if this 15-minute gap gets respected, then we're looking to go short to this draw right here that I can mark out, this draw right here, or we have these A+ draws right here, London high, Asia high, and we also have these highs all the way up here, these stacked highs that can get ran through. So knowing that we have this 15-minute gap, we don't know exactly where price wants to go, but once we know if it gets respected or disrespected, we'll know what direction to trade in. So going down to a lower time frame, this was at market open, 6:30 a.m. for me because I am on the West Coast. But at market open, price pumps up, disrespects this 15-minute gap that I had marked out, and we shoot up, showing that we want to go to these draw liquidities up here, Asia, London high, 2 A+ draws right here. This was confirmation that price was trending towards these draw. So what do I do? What was the second thing that we want to look for? When we trade this strategy, we want to look for some sort of retracement, and that is exactly what we do. Let me take off this 15-minute fair value gap right here. We pump up, show momentum in this direction. Now I'm looking for some sort of retrace, and that is what we get. We get this retrace into this 1-minute gap right here that I have marked out. Perfect. We got some sort of retracement. Now we want to look for confirmation that we're going to respect this fair value gap, and we're going to continue higher. And what happens? We do get that confirmation. 2 bullish candles right here. You can enter right here or mid candle. I personally enter off of this second candle right here because the draw on liquidity is so clear that we want to go here, and I'm expecting this fair value gap to get respected. So enter right here, stop loss below these wicks right here at the low, targeting this draw on liquidity, Asia and London high, and I actually extend my take profit because we have all these draws right here that we can potentially continue higher to, and that is why this strategy is so good, because price is continuing. That is literally what this strategy is, continuation. So we're expecting price to continue. I could have taken a base hit and targeted right here to these Asia and London highs, and that would have given me a 1 to 1.28 RR trade. Not bad, but with the continuation strategy, if there's more drawn liquidities higher, we can expect price to continue. So what do? I extend my take profit all the way up here, and this hitting, this is a 1 to 2.6 RR trade. So you can still get high RR trades with the strategy. You don't just get high RR trades with reversals, you can also do it with continuation. So that is why I like this strategy. I just expect price to continue with the trend. The trend is your friend. So this right here is exactly the trade I took. If you want to watch this trade recap to go a little bit more in depth with my thought process, go watch that. It was posted on October 10th. And Yeah, very, very simple. So that is why I like this continuation strategy. It is a very, very simple strategy to learn. This strategy allows you to be patient, and this strategy is not for traders who want to be taking trades every single day. If you are a patient trader and you're capable of waiting for your setup, waiting for the setup to present itself, then you will succeed with this strategy. But if you are a gambler, if you want to be taking trades every single day because you like the dopamine of getting into trades, trying to make profit, this strategy is not for you. But if you are a patient trader and you're looking to get to 5-figure payouts, consistent 5-figure payouts, then you definitely want to learn this strategy. And if you want to learn this strategy, make sure you subscribe to my channel, because I will be teaching this strategy over time. I will be posting what has helped me to get to this 5-figure payout, what I had to overcome, what I look for, and I will continue to post trade recaps on the trades I take, because most of my trades are continuation trades, and if you watch those trade recaps, you will get an idea of how I apply this strategy. So if that is something you're looking for, make sure you subscribe to the channel. If you enjoyed this video, if you stayed to the end of this video, that shows that you're really dedicated to actually improving your trading and showing that you want to actually get to these 5-figure payouts, and you want to overcome and beat the prop firms, because these prop firms are designed to make you lose. They want you to lose, and they want you to lose and continue to pay their evals, pay their activations without getting a payout. So with these prop firms, you want to just survive, make sure you're keeping your accounts, not blowing them, and if you continue to survive, manage your risk, have a high win rate, you'll keep your accounts, and eventually you'll be able to build a big enough balance to where you can actually take a good size payout, a 5-figure payout. So that is all I really have for you today. A little bit longer video for today, but if you watched till the end, I really do appreciate it. And if you haven't already, just subscribe to the channel for more videos to come. Like the video if you haven't already. Follow my Instagram. I do DM message back all the people that's DM me, and I really do love talking to you guys. So that is, I'll leave my Instagram down below. It's at @TheJamesRodriguez, same as my YouTube channel. And yeah, that is all I really have to say for you guys. Don't want to keep you much longer. And yeah, that's all I have. So I'll see you guys in the next video. Peace.